Hey, everybody. All right, we're here now. A few technical difficulties. What's new, right? But joining me today, I'm very excited. I've been like a fangirl of Courtney when I first I don't know where I first saw you speak. It was somewhere just online. I came across something that you had talked about taxes. And I was like, oh my gosh, where is she been all my life? Like I've needed this advice and this planning all of my life because I've always been an entrepreneur. So Courtney is going to chat with us a little bit today about how to take our Color Street business and use it in, well, a couple ways. Saving money for us because we're smart enough to have our own home-based business. And number two, using it as a recruiting tool to help others realize how smart it is to join a company like Color Street. So welcome, Courtney. Tell us a little bit more about yourself, and I'm excited to get started.
Awesome. And thanks so much for having me. And guys, it's a pleasure to be able to share with you today, how to free up money, obviously. And I think that's one of the things that people fail to realize is that taxes are the number one expense. So I have been an accountant for the last 19 years. I am currently what you would call a tax strategist. So it is my job to find money and free that up for people and give them the strategies and the systems in order to save as much money as humanly possible. So that's my focus. We have a full service accounting firm here in Greenville, South Carolina. We have clients in every single state. And I would say at this point, we have about 75% of our clients are network marketers. And we have clients that range from just getting started in business to $24 million in income in the network marketing space. And our largest clients over $120 million a year. So, it's as far as what we deal with on a daily basis, I have a good view of the world, and including traditional business, and teaching people how they literally would be brain dead not to own some sort of home-based business. So I have 6 children. We homeschool all of them. They are from ages 18 to 7. And, we built our accounting practice back up in the last 10 years. I had a business about 10 years ago, sold it. The guy sold it to stop paying me, lost everything I owned. I was $250,000 in debt. And so we actually built our accounting practice back up over the last 10 years through home, and we relocated into a 6,000 square foot facility just recently, and we moved out of our home almost a year ago now. So I'm sharing the things that I will share with you today is not something that I learned from a textbook. It's not something I learned in college. It's not something that's taught in any sort of continuing education class. It is real world experience and reading the tax code and understanding it to a way that benefits you as a business owner. And that's exactly what you guys are. So I'm excited to be here today. Like I'm going to shut up so you can ask me a question if you want to, or I'll just keep talking.
No, that's good. I'm glad you're going to keep talking because I finished your book. This is Courtney's book, More Relaxing, Less Taxing. And I will be giving away 10 of these for our team today. Yeah. So I will be giving away 10 of these later today. And I will keep an eye on the comments over here. Participation is a good way to earn a book.
Awesome.
So one of the things in your book, speaking of in your book, is you said the average American pays more in taxes than he or she does on food, housing, transportation, and clothing combined. That blew my mind. Can you tell us a little bit more about that?
Yep. And so here's what happens, guys. And I want you to understand that although, the W-2, I want you to understand W-2 employee system, I'm not knocking it, but if you continue to stay in a W-2 employee system and do not have some sort of home-based business, you are overpaying massively in taxes. And the reason why is that there are 2 tax systems in our country. There's one that was created to steal wealth away, and that is truly the W-2 employee system. And then there was a tax system that was created to provide wealth. And if you understand it, and I'll explain, it'll make a lot of sense, is that business owners are creating economy every day. They're going out and making money, over and over and over. They're selling they are also spending money to grow their business, and they're also hiring employees. And so what happens from there is someone has to pay the taxes. If business owners paid the same amount of taxes that W-2 employees did, there would be no W-2 employees to pay taxes. So if that makes sense. So someone has to pay the lion's share, and that pushes off to the W-2 employee. So, in essence, the person who is helping the least, and I'm not saying anything about, I want you to understand that's, a W-2 employee is helping their household, and a business owner is helping, we have 25 employees. So I'm helping 25 families. I'm helping thousands of business owners, every single day in our company. So we are helping more people. And because of that, we're allowed massive tax deductions. So there is, sadly enough, in our country, the average household in America makes $60,000 a year because everyone is taught to go to school, get good grades, and go get a good business. Nope, go get a good job. That's what everybody is taught, right? And so what happens is that it forces you into that tax system that was created to steal wealth. So the average American household, family of four, is making $60,000 a year. They're paying $14,000 in taxes. Their take home is $46,000. And sadly, the cost of living in America is on average of $53,000. So that means that the typical American family household is going in debt $7,000 a year to work 40 hours a week, 50 weeks a year, take 2 weeks paid vacation. And if you take that $60,000, which is the annual income, and you take the $14,000 you're going to pay in taxes, it is upwards of 35-40%. Now, here's the problem. I want you to understand, you're also on top of that have to pay sales tax and real estate taxes and property taxes, and all these get added up. So most people in America are working off of what we call 50% money. So if you're a W-2 employee, that's literally what you have left over, 50% of the money, so that you can use that money to go out and buy the things that you have to have, right? Your needs, and then some of your wants. Whereas a business owner, see, we get to decide how much money we pay in taxes. We truly do. So we can make our money. We can buy the things that we need and we want. And a lot of those become business deductible. And then because of that, we have a taxable income, and then we pay taxes on that if there's anything left on paper. The benefit of being a home-based business owner, guys, is the fact that you don't have to spend a lot of money to get involved in a home-based business. Plus, you can now redirect the living expenses that you had yesterday as a W-2 employee and turn those into business expenses. See, when I heard those statistics 2 years ago, it shifted my entire accounting practice. So I was focused on becoming a fractional CFO for a handful of companies. I only have to deal with 10 or 12 clients a year, at any given time. And I changed that when I heard those statistics, because I knew at that point I had done over 900 tax returns for people in the network marketing space when I was in network marketing. I'm not anymore. And when I was in it, I would show people this is where you would have been had you not had your network marketing business. And this is where you are with your network marketing business. I'm not talking about an increase in income. What I'm talking about is extra expenses, then being able to take their living expenses and turn those into business expenses. So things like cell phone and meals and mileage and internet, business use of home, medical bills, medical insurance, all of those things can be tax deductible products, right? All of those, we're already spending money on them anyway. When you're a W-2 employee, you get no benefit from them. If you are a business owner, you start being able to take those and write those off as a tax deduction. So I knew at that point, when I heard those statistics, that I could save the average American household $4,000 to $7,000 a year minimum. And so when I heard that, I was like, well, gosh, like I'm the only accountant who's been in the network marketing space, who's been successful in 2 different companies, made it to the top 1%. People would be willing to listen to what I had to say. And I was willing to open my mouth and share the information with no fear of what somebody thinking, well, the IRS doesn't allow that. That's not true, guys. What you have to understand is the IRS will allow you to do anything as far as tax deductions go that will grow our economy. Because the hopes is that one day we'll hire employees, and those employees will be taken off of unemployment. And that's why the system works the way it does. It's a perfect system if you're in the right system and that you understand the rules of the game, because seriously, the tax law, it's just a game. And if you get the rules and you play the game correctly, then you save so much money in taxes so that you can then provide a legacy for your family, and you're not giving away, more money combined than your food, clothing, housing, and transportation. You have more money to spend on the things that you need to spend on just by attempting to earn income and putting in 3 to 5 days a week, 45 minutes a day, those 3 to 5 days a week. That's what the IRS considers doing what's called daily business building activities. So last thing I'll say about it, and I'll let you talk or ask me whatever. We're not talking about you signing up for a company and you not sharing that with anybody. What we're talking about here is that your intent of joining a company should be to make money. Now, it could take you 1 day, it could take you 1 hour, it could take you 1 year, it could take you 10 years to make money. The attempt of earning an income along the way is what guarantees you those tax deductions. So if you don't make any money, and you are attempting, meaning that you're talking to people and you can show that you're having conversations with people, you're texting them, you're messaging them, as long as that attempt is there, now you can take advantage of the massive tax deductions along the way. So it's the best of both worlds, guys. It's the only place that I know of in the network marketing space that you can get involved, and the personal growth and development that you receive is second to none. Like, other than maybe Tony Robbins. And I spend $85,000 a year to be a platinum partner with Tony Robbins. So you can either do that and there's no chance of me making any money there, or you can join a company and you can be a part of the team and they can help you grow. So you get the personal growth and development, which is, by the way, tax deductible, and all the travel that goes along with it. And then the other part of that is that you have people who are willing to help you get to where they've gotten because they financially benefit from you. It's just a network of people who are helping other people grow faster. And because of that, they make more money. That just makes sense. You help enough people get exactly what they want, you'll automatically get what you want. But on added bonus, you might make some money, but the guarantee is tax savings. So the guarantee is tax savings. The guarantee is that you get around the right people so they can help you grow to another level. And for me, no, I'm not in network marketing anymore. Network marketing changed my entire life. Guys, this network marketing space took me from $9,000 a year 6 years ago, building up my accounting practice again, after, I lost it all, to now we're on pace to do $2.3 million this year. And we've spent $0 in marketing and advertising. And all I've done is run my mouth and teach people the information that I'm sharing. So I'm helping more people. Therefore, I'm making more money. So, and that's what the network marketing space is all about.
Oh my gosh, Courtney. Yeah, we've got comments here going. People are like, mind blown. My husband needs to hear this, all this stuff. And you know what? This is what's really wonderful is when people join Color Street. So Courtney, we sell dry nail polish. And this team, just so you know, guys, already for July, we've sold 1.2 million on our team this month in dry nail polish. So I promise a lot of you are making money, and Courtney's showing us that there's also ways to save money. So even if you didn't have a great sales month this month, as long as you're making the effort, there are some ways that you can still, even if, these are funny words, I guess, but even if you suck at selling, then you can still save money, make money in this business. Yeah. And I love that. So Courtney, we'll get into some of maybe the tricks and stuff. And we'll get into that right now because I've got 4 kids. And so one of the things that I read that you said was that you can hire your own children to work for you and you can use that as a tax write-off. Can you tell us a little bit more about how that works, some of the fringe benefits that you can use when you own your own business like we all do?
Yes. So, I have 6 children, and you can actually pay those children $12,000 a year to work for you. So if they're under the age of 18, there's no taxes at all. There's no unemployment. There's no Social Security. There's no Medicare taxes. Nothing. So they don't have to pay taxes on the $12,000 because of the standard deduction that every person in America is entitled to. And you don't have to pay taxes on it because it's a business expense for you. If they're under the age of 7, it's been held up at age 7. That's precedent in court that you can hire your kids at 7. I have paid my children younger than that, 5 and 6 actually, and I paid them to like go on and invite people on Instagram and invite people on my Facebook page. So you can actually do those things and just get them like hit the blue buttons. You can also have them help clean up the house. You can have them, we have a pool. They can help clean up the pool. They can do lots of things for you and then add in modeling. So if you had them on your social media and you posted them with products or services, whatever you did, then you can actually utilize that as well. So the benefits of that, there's a couple other things that can be added in. One, that would typically save the average American $3,500 to $4,000 a year. And all you're doing is shifting income. You're shifting the income off of you as a higher income taxpayer. So you're going to pay more. You're in a higher tax bracket and you're shifting it off to someone who's in a lower tax bracket. I know there's frequently asked questions about this. Yes, you can hire your children over the age of 18. You would have to withhold FICA taxes on them if you did. Yes, you have to prove that you've actually transferred money out of your account and into an account for them. So your name could be on it, and it doesn't matter what happens to that money once it goes into that account. So what we do in this situation is we hire our kids and we pay them, and then they pay for their stuff, or they pay for anything that's not a tax deduction. So things like going out to eat, going to Carowinds, going to Disney World, like those are not tax deductible for us, depending on what they are. Then they would end up paying those. So out of their pocket. Now, the other thing is that if you have like children, you can hire them to do just about anything. You can have them help clean up the house if you have a home-based business. You can have them go with you to events and be like a personal assistant. I do that all the time. I have a daughter that works full-time with me. She's a bookkeeper. She's 18. She's actually a tax preparer. She's 18 and she's going to Clemson in January, but she's been working with me full-time, especially throughout COVID. And so, there's so many things that you can have them do. Anything that you would pay someone else to do, you can pay your kids to do it. So that's a huge deduction. Now, that's that one thing. 12,000 times 6 is $72,000 deduction. That saves me about $28,000 a year in taxes. Wow. Now, a couple of the other fringe benefits to go along with it. If your children work for you and you have an athletic facility, a golf course, a tennis court, or a swimming pool on your property and you allow them to utilize it, well, guess what? That's a fringe benefit. It's no longer a repairs and maintenance. It's no longer, a personal item. It becomes a tax deduction for you. So it's a fringe benefit and it can be written off. If it's equipment, it would be written off over 5 years, but you can actually take advantage of it in the first year, 100% up to your net income. Same thing with the swimming pool. So that one's written off over 15 years. But you can have a chance to bonus depreciation that and take advantage of it, even more of it, if you're making more money in network marketing. The other advantage is when your children hit the age of 20, for those of you, you can actually pay them a college education. You can pay them up to $5,250 a year. So in the event that you have an 18-year-old, 19-year-old, whatever, you would pay them and then they could pay for their college. And so regardless of what age that is, you're going to be much better off doing it that way than you are them. And then you are paying for it yourself because you're limiting how much money you're actually going to receive in a credit from that. The third thing that, I want to discuss let's step back. If you have an S Corp election, we can still do it and save the money in taxes, but we have to create just an entity like a sole proprietorship or an LLC that we pay the children through that way. And the reason why is we want to be able to eliminate all taxes. And that's kind of the goal here. Like, I'm not about deferring taxes. You're not going to find me telling you how to put money into a 401k or a SEP or a simple. I think I'm not even going there on what I think about that, but I'm totally against tax deferred retirement. What I'm for is eliminating taxes right now and in the future. And you can do that very easily by implementing some of these things. Now, the other thing that you would add in for children is travel. So even if you hired your spouse and they went with you to events and they helped you, then you could write them off as travel as well. So all of their travel becomes tax deductible. And here's a cool note I want you to understand, guys. So what I always do is when I do events, I'll always take at least one of my children with me. It is a way for us to spend time together, but it's also, I'll go either 2 days on the front end or 2 days on the back end, and everything we do, it becomes a tax deduction because I'm spending so much time the other days. And they're considered, when you work, it's considered an 8-hour day. Well, I don't know how many business owners work 8-hour days. Like, that is definitely not me. I would be bored. But as long as you're putting 4 hours and 1 minute a day towards working, then you can actually write off, if you're gone 10 days and 5 of those days you worked 8 hours and the other 5 you did not, then you can actually write off the total 10 days. So most people don't realize that, and that is a huge benefit. So if you're going to an event that, typically lasts 12 hours a day, which, Tony Robbins is 18 hours a day, like that's like, 6 days in one, just about, then you get so much time on the front end and the back end that you could truly just spend time with your family doing things, and it all becomes a tax deduction for you.
Wow. It's just mind blowing. And it's knowing these tips and tricks. And so some of the things that maybe people would want to do right now would be signing up for an LLC, right? That would be maybe a first step, or talking to somebody like you about getting, and this was the big thing I learned, the big aha moment. Like, I've been so mad at my tax guy for years. I'm like, I need more advice. How much should I be spending on incentives, and how much can I travel, and all these things. And oh my gosh, in your book, you taught me that there's really 2 things. You've got tax planning, and then you've got tax preparation. And
Yes.
The tax planning has to happen ahead of time. And so for tax planning, I'm so glad that I've come across you, and my husband and I are going to meet with Courtney tomorrow. But what is something that people could do to get started right now to be making the right and smart financial decisions to take advantage of the tax benefits of owning a business?
So a couple things. One, I will urge you to not be concerned about taking the benefit of the tax deductions that you're entitled to take. So if you've been told that you have to make a certain amount of income, that's not true. And of those people on here, please listen to me. If you're using TurboTax, I just found out recently this year that they limit the amount of expenses that you're actually allowed to take based upon your gross income in your business, which is absurd. Because the whole purpose of you starting to build a business is you're always going to have a loss on paper, typically the first year. And honestly, the first 3 to 5 years, you're going to show a loss in any traditional business on paper. And that's the whole purpose of having a business, is let's make money and let's show losses on paper so that we don't have to pay taxes. That is literally what I do every single day, is try to eliminate as much tax debt as I possibly can. The second thing is that I want you to understand, hiring your kids and your spouse, huge deal. You definitely want to do that. If you're dealing with an accountant that does not understand network marketing, I had a CPA email me yesterday, and apparently I spoke at a national event for a network marketing company a couple months ago, and they're like, I just met with these new clients, and they're in network marketing, and it's a big CPA firm in Texas. And he said, can you give me some advice on writing off their product? And so I gave him the advice and why they would do it and everything else. And he emailed me back. He's like, I really appreciate it. That totally makes sense. Like, I'm going to write that off. And I'm like, oh my gosh, this is crazy. But accountants don't understand network marketing traditionally. So they understand brick and mortar. They don't understand network marketing. And guys, if you've been taught that 3 out of 5 years that you can't claim a loss more than 3 out of 5 years, that's not true. Amazon claimed a loss for 20 years. Last year, they made $11.2 billion. They paid $0 in taxes because they bought a whole bunch of vans that you see driving around, Amazon vans, and you get the same tax benefits as they do. Okay. So leading into, obviously there's 3 things that when we're doing a tax strategy session with someone, because this will make it very clear, that we're looking at. We're looking at missed deductions. And hands down, people are always missing out on deductions. And I'll give you a little secret than I've never given anybody else before. But if you will take the amount of money that you're making from your network marketing business, and this is if you're making, like actually making a profit, and you take the net income, so the gross income and the net income, and you take the net and divide it by the gross to determine your profit margin. That's how you determine your profit margin, like how much money am I truly making on paper now, not in the real world. But if that number is higher than 40%, you are overpaying in taxes. Because I've never seen a network marketer, I don't care what, size, how much money they're making, they're never making more than 40% in profit margin. And the reason why is because we have all of these deductions that we can take advantage of. So that tell me really quickly that you're overpaying. And so I'm looking at deductions, like what's missing: business use of your home, internet, telephone. Are you writing off your car? Are you taking mileage? All of these things. The second thing is the structure. And that's exactly what you were talking about. So once you start making money, you want to save as much money as humanly possible. See, again, as I said, with a W-2 employee, you have no access to lower your taxes. And some people may say, well, I itemize. Well, you're still missing out on $24,000 worth of deductions, because I don't itemize and I'm still getting the benefit of $24,000 a year as a standard deduction. So if I had $30,000 in itemized deductions, I'm only getting an additional $6,000. What my job is to push those things that should have been itemized or could have been itemized off to be business expenses, so I can take 100% deduction on those and they not be capped at all. And so you definitely can do that on most of the deductions that you would have. So as a business owner, let's say we make $100,000. And after expenses, let's say we have just in this scenario, we have $60,000 worth of deductions. That leaves us with 40 grand left over in net income. So instead of paying taxes, if you're a W-2 employee making 100 grand, instead of paying taxes on 100 grand, you now as a business owner pay taxes on 40. And there's something even more special about that, is something called a 20% pass-through entity deduction, which says if you own a business, any money that you make in net income, you don't have to pay taxes on 20% of it. Okay. So that's that 40 grand. So you made 100 and you bought a whole bunch of things that you wanted anyway. And so now you're left with 40. Then you have a standard deduction, which gets you down to $16,000. Then you don't have to pay taxes on $8,000 of that. So you're left over and you're paying taxes on 8 grand. Would you rather pay taxes on 8 grand or would you rather pay taxes on 100?
Yeah, that's a no-brainer, right?
Exactly.
And it's all the things, like you said, all the things you're going to buy anyway, whether you have a regular 9-to-5 job or you're doing something like this, or you have both.
Yes.
You're going to spend money on your cell phone, on your internet, on your computer, on your gas, on your car. I mean, all the things. But if you own a business, then you can write some of that off. And so this is where I think it would be amazing for us to use as a recruiting tool. If you were, could you give us some advice? Because I would like to, of course, share this with the world. Like, okay, you can join our company for $129 and start your own business. And as long as you give it a good college try, right, you can save money on taxes. What is some good verbiage that maybe we could use to take the info you're giving us and use it as a recruiting tool?
Yes. So let me step back and talk about the LLC. Treat it as an S corp first. And then we'll do that if that's good for you, because I don't want to forget and then not come back to it, because there's some of you that are not making money yet, and that's perfectly okay. And we're going to talk about that. And there are some of you that maybe just got started, and you don't even know if you want to do this as a viable business. And I'll attack both of those at one time in just a second. The people on here that are making money, this is super crucial. Once you get to a point where you're making $1,000 a month in gross income, you need to have an LLC. Now, an LLC just limits your liability, but it does something that's very crucial. It allows you to either treat your business as a sole proprietorship. So we just talked about that $40,000 scenario. So you pay tax on 40 grand. Well, on that 40 grand, what happens is you have to pay federal and state taxes, right? Like everybody else. And then you pay self-employment taxes. So you would pay $40,000 times 15.3%, which is the self-employment tax rate, and you would have to pay $6,000 in self-employment taxes. Now, as a W-2 employee, you pay what's called Fica taxes. So you pay Fica and your employer matches that Fica. So you only pay 7.65%. But at that same level, you're paying $7,600 in taxes, whereas an LLC or a partnership or a sole proprietorship are paying $6,000 in taxes in those self-employment. Okay. They're the same thing. It's just because you're the employee and the employer, you match them together. Okay. So now how do we get rid of that? How do we even save more in taxes? That same strategy, if you have an LLC, and then we take that LLC and treat it as an S corporation, that same $40,000 is left over. We only have to pay self-employment taxes on 20% of that income. So 20% would be $88,000 times 15.3%, which would be in essence your paycheck that you would pay yourself. And we can help you do that. I know I'm throwing a lot at you guys, so I don't want you to think that you have to do all of these things on your own. We can help you with these and for very minimal cost. But the $40,000, you pay yourself 20% in the paycheck, which is $8,000, 15.3% of that, which is the self-employment taxes. Now you're paying $1,200 in self-employment taxes as opposed to $6,000 or $7,650. All you're doing is 4 pages worth of paperwork. So the LLC has to be done. We charge $250 for that, plus the filing fee. You can do it on your own with the Secretary of State and get a federal ID number. You don't have to use us. The S Corp election paperwork is a little harder, and that's paperwork we send to the IRS. So that's a $250 one-time thing to save you thousands and thousands and thousands of dollars, if not tens of thousands of dollars over your lifetime. So that's crucial. So the LLC, once you get to a point where you're doing 1,000 gross, get an LLC. Okay. Once you get to a point where you're doing $1,000 a month in net income, you want to take the LLC and we want to file the paperwork to treat that LLC as an S Corp election so that you can save more money. Now, you may ask me, can I just get an S corporation? Yes, you can. It typically costs a couple $1,000 and you don't have any leeway. So we don't want to treat it as an S Corp until it becomes beneficial for you, because there's about $1,800 a year in extra legal and professional fees that you would have to pay us in order to prepare those returns. So I've realized that once you get to a point where you're doing $1,000 a month, the taxes that you would pay are about $1,800. What you would pay us would be $1,800. But the $1,800 you pay us is a tax deduction as a business expense. The $1,800 you pay the IRS is not tax deductible. So I hope that helps and helps people understand what they need to do moving forward. Right? Does that help?
Yes.
You think? Okay.
Yeah, people are saying their minds are spinning and all that stuff. And some people are asking how this works with if you have a regular job. So you've got a W-2 job plus this, which is actually a great, suggestion. How does that work for people that have both?
Yes. Yeah. So I definitely, and hey, there's a question here and I want to help you guys understand this because this is super powerful. If you don't get anything I say today, somebody posted, they said, we got audited from my last business because my profits were negative. That is not why you got audited. The auditor told you that in order to scare you into not taking advantage of the tax deductions. So you have to understand that auditors actually make a percentage of what they increase your taxes to. That's how they get paid. And so their whole goal is to scare you into not taking tax deductions. So what do? Well, you know what? I got audited last year because I had these expenses. Now I'm not going to take the expenses. So you pay more in taxes. They did exactly what they were supposed to do, right? Scare you into believing that that's what causes you to be audited. The reason why you get audited is you check a box on a tax return incorrectly. And that forces a question. And then what happens is when they can't get you on one thing, they try to go after everything. But it's not your business. And if you have an S corporation, an S corp election, if you have that instead, you're 10 times less likely to be audited. So huge deal as you start making more and more money. And over $500,000 a year, your chances of being audited are pretty likely over a 20-year period, a 20-year time frame. Under $500,000 a year, you're almost not like, I mean, like it's so minuscule. It's not even like, I wouldn't even worry about it. The only thing you need to focus on is making sure that the information you're putting on your tax return, that you actually have some proof of that. So that, that's all I'll say about that, but it's super powerful. Getting back to your last question on W-2 employees and, what prospecting tools, guys, like, listen to me. 46% of Americans before the pandemic did not have an extra $400 to their name. And 69% of Americans did not have an extra $1,000 to their name. It is your duty to go out and share the amazing world of network marketing to people. Now, most people aren't educated the way that I am and the way that you are learning today. They have no clue what I'm even talking about as far as tax deductions go. And I just finished a book called What's Your Plan B? Why You'd Be Brain Dead Not to Have a Home-Based Business. And the whole purpose of that book was for it to be a prospecting tool for you to go show someone and say, here, you don't have to listen to me, just listen to her. Like, when I was involved in network marketing as an accountant, I had a book called Lower Your Taxes Big Time by a guy named Sandy Botkin. He was an IRS attorney, a CPA, and so he had gone through the tax code, listed all the tax code in his book, and I took it around with me everywhere. I treated it like my Bible. And I'd open up the first chapter of the book, and it said, why you'd be brain dead not to own a home-based business if you don't already own one. And it talked about this example of a W-2 employee who is making, $60,000 a year, and they have all of these expenses, and what's left over, their take home is very, very minimal. But if that same person had some sort of home-based business, then they would be able to deduct all of these expenses from that, and their take home is going to be so much greater. See, most people in our country today, they believe that in order to get ahead, you either have to work more hours, you have to get more of a higher pay raise, you have to go get a second job. That's not how you get ahead. You can't fight the battle that way. All you're doing is forcing yourself into a higher tax bracket. And I'll give you an example of how this all works, so it makes a lot of sense to you. So I had a couple come to me last year. They were making $140,000 a year total. One made $85,000, the husband made $85,000, the wife made $55,000 a year. And so they had just gotten a pay increase of $35,000 a year, which was the 140. And they want to know how much money they were actually going to have to pay extra in taxes and how much they were going to keep. We determined that $35,000 was only generating an extra $13,000 into their household, because what it was doing is forcing them into a higher tax bracket. Now they're paying more money on all of their money, and so they're left over. That's an extra $1,000 a month when it's supposed to be $3,000, right? And so you don't realize what's happening. So you come home and you're like, well, this is my paycheck. Like, where is my paycheck? And it's all gone to pay taxes, or at least part of it, a huge majority. And so then what happened while they were there, I said, you know what? Let me just see what it looks like if we took away the $55,000 a year and you just stayed at home and only had the $85,000. We determined that she was only generating an additional $1,800 a month into her household with that $55,000 a year paycheck, which is only $21,000 a year, guys. She was paying $34,000 in taxes to go to work. You hear me? Like, you can make $1,800 to do anything at home. Anything, like anything. You come up with anything. And so if you have the time, see, that's the problem. Like, when you're a W-2 employee, you don't have the time, because you don't have the time to even think about making extra money because you're typically working so much. So now, that being said, that person, I told that couple, I said, look, if you found a network marketing business, something you're passionate about, something you can just open your mouth up and tell somebody about it. Like, I got my nails done today. I love shiny nails, right? So, and that's what you guys do. So, I mean, you can get excited about that, and you can tell people about that. Like, I make money to go tell people about shiny nails. Like, okay, that's awesome. Yep. The fact that I just attempted to sell you my shiny nails, right? I just don't have any nails to sell. So I'm not in Color Street. But here's the thing. I said, if you just find something and make $1,000 a month, you would be better off than your $55,000 a year paycheck. And here's why. Because the minimum that you as a business owner can save as a home-based business owner is between $20,000 and $25,000 a year in tax deductions, things that you're already spending money on. Meals, mileage, cell phone, medical insurance, all these things, blah, blah, blah. Business use of home, travel, hiring your kids, all that. Just hiring your kids, if you have 2 kids, that's $24,000 a year. That boom. That's $8,000 tax deduction or tax savings for you. Not a tax deduction, that's savings, like dollars.
Finally glad I had a lot of kids. Okay, there's a good reason. All right.
Exactly. So the $1,000 a month, that's $12,000 a year that they made. Here's what happens. They got $25,000 worth of tax deductions. So now that's a $13,000 loss on paper. It's not a loss. It's a loss on paper because you're going to spend money and you're already spending money. And then now that you have a home-based business, you have access to these expenses. So you get to write them off. So that $13,000 goes against his $85,000 because dollar for dollar, any money that you make or lose goes against your other income from your, and that could be interest income, rental property income, whatever. That loss goes against his income. That actually puts them back into an even lower tax bracket than where they were. And now he's bringing home more of his money and they're better off than for her to go to work and for her to go to Starbucks every day and get a Starbucks because she needs some caffeine to go to work, for her to have to go out to eat at lunch every day, for you to buy takeout every single night because you're too tired to come home and work. And guess what? You get to spend time with your children. I can tell you this. For 10 years, I built my business through working from home and being with my children. And we homeschooled our children. And we have taken probably 60 or 70 vacations over the last 6 years. I know that much. And been a part of such amazing things. And my children have seen so many amazing things because I was able to build my business from home. Right now, I'm building it from our office out of necessity until I can get to the point where the day comes in the next 30 to 60 days that I don't have to be in this office anymore because I built a team of people around me who can do the things that I don't want to do anymore because I just want to run my mouth. Like, I just want to be just like a network marketer. I just want to run my mouth. Like, run my mouth, pay me. Like, I'm just super happy. Like, I'm just going to talk and people are going to pay me. And that's exactly what network marketers do. It's fun, right? So there's my 2 cents on it. I'll be glad to answer anything else you got.
Okay, so I'm trying to look at some of the questions. So they're talking about if you're buying stock to sell, how would you handle the taxes paid?
If you're buying stock, like you mean inventory?
Inventory.
So so typically in the network marketing space, you are, the company's handling as far as the taxes. I'm sure you're meaning sales tax. And you can obviously write it off. They're typically hitting you with the sales tax, and then you can in turn collect and receive that sales tax back from that person, that individual. Just make sure you don't collect more than what you've actually paid in, I guess.
Right. I think they're asking if we have an inventory, is that something that you can write off until you sell it, like the cost of goods sold type thing?
So cost of goods sold, how that's determined is you have a beginning inventory. So let's say you start off with $1,000 at the beginning of the year, and then that wouldn't be tax deductible until you sold it. Okay. So you start off with $1,000, then you have your purchases, whatever you bought throughout the year, and then what's left over, your ending inventory at the end of the year. The difference, all of those, combined, is going to be your cost of goods sold. If that makes sense.
It does. Okay. One other thing I saw somebody say, and after reading your book, I realized like this would be super frustrating, is when you're working with an accountant that says, oh, we shouldn't do that because that's going to be a red flag. And of course every year I'm always like, well, I can't write that much off. It's a red flag. It's a red flag. And you're telling us that this is legal. We can do it. It's smart to do it. What do we do if we have an accountant that's saying things like that to us?
Hire us. That would be that. I mean, guys, it's hard. Like, it's hard to tell you, like, to go look for a certain type of accountant. There's only a handful that I've ever even met that thinks the way that we think. But there's a couple books, like Lower Your Taxes Big Time. Like, there's another one, What Your CPA Isn't Telling You. And it's actual CPA, Mark Culler, that is talking about, is actually taking people through the story of finding some sort of home-based business, because that is the greatest tax loophole. If you want to call it a loophole, you can, but it's tax code. Like the things that I'm telling you are straight. Like you could go to the 17,000 pages of tax code and you can find the information I'm talking about. The IRS wants us to take advantage of these tax deductions because Google started in their garage. Amazon started in their garage, and so did Microsoft. And so you have to understand that if businesses don't get up off the ground, and they can't, if they're paying massive amounts in taxes, they can't grow to the tune that they need to be big businesses one day. So you have to take advantage of these tax deductions. And I get if your accountant says they don't get it, I didn't get it either. When I got it is when I joined a network marketing business. When I got it is when I sat down for 18 hours a day at Starbucks and saw people over and over and over again and did not tax strategy session, but presentations with them. And I saw it when I went to continuing education events and realized, oh, I'm growing myself, but I'm growing my business all at the same time. And so when I was able to put those together, I have a different understanding of network marketing because I've been in your shoes. Like, I build a team of 900 people. I get what that takes. I get how much work that is. Where on the outside of the world, you've got an accountant just looking at it's like somebody paid you money like to just talk to people. Yeah, they sure did. That's exactly what they did. Like I did a couple things in the long run, but at the end of the day, all you're doing in network marketing space is selling. So here's what I'll tell you. This is one thing that I got from Sandy Botkin at his TaxBot University. So he had this university that I listened to, and I thought that your expenses had something to do with you being audited as well. And then I listened to this video and I realized he said clearly, your expenses have nothing to do with you being audited. Your income, if you dramatically increase in income or dramatically decrease in income, that is what triggers an audit. So if you were to go from $500,000 a year to $5,000 a year, if you were to go from $50,000 a year to $1 million a year or $200,000 a year, that could trigger an audit. But the thing is at the end of the day, the only thing that matters, and we include audit protection on every tax return with us, so you don't have anything to worry about with that. I've only ever had one client audited in 19 years. And guess what? I'm sure you've heard too, Kelly, that if you claim business use of your home, you're more likely to be audited, right?
Oh, I've heard that, but now I know from you it's not true.
In 19 years, I've never, ever, ever, ever had any client who was involved in direct sales, who claimed a home-based business, who had business use of their home. They've never been audited. I've had one hairdresser and we won the audit. So if that helps you, I want you to stop being scared. I want you to just focus on if something were to happen, you need some sort of software, an accounting software, whether that be Hurdler, whether that be TaxBot, whether that be QuickBooks. Do not use QuickBooks Self-Employed. It sucks. And do not use an Excel spreadsheet. And do not use a ledger. You need some sort of software. And it'll make your life easier. And it's next to nothing. And it's a tax deduction. And at the end of the day, you'll be all set. Take as much as far as taking pictures of receipts as you can. I suck at that, right? But if you have an accounting software and you then take that accounting software and make sure you're pulling in all those transactions, you're not only going to find more expenses because you don't realize how much money you actually spend on business as you're continuing to grow it. You'll also become audit proof, so you don't have to worry about that. And then you are making sure that the tax return is going to match your set of books. And then we can help you along the way throughout the year, have tax strategy sessions that can help you keep more money. But if you don't have a good set of books, I don't even know how you're running a business. Like, you have to know what your profit margins are. You have to know what you're making in order to treat your business like a business. Like, if you want to make money, you should have some sort of set of a profit and loss statement so that you can provide and say, here you go. This is where I'm at. This is where I'm growing. So it's not a requirement. I'm just telling you, it definitely will help you in so many ways, because you can then focus on, where am I at? Where do I want to be? How do I get there? You know, that's definitely crucial.
Well, and one thing I want to point out is, just because I think a few people are confused, is we're talking income taxes, which is a different subject than sales taxes. So
yes.
You cannot change or lower the sales tax. Yeah, that is based on, for us anyway, wherever you live. If you're ordering color street inventory, or if your customer is ordering, their sales tax is based on the county and state that they live in, where it's being shipped to. So that is not something that we can mess with, and we should be, of course, charging our customers the sales tax to reimburse ourselves. We are talking about income taxes and lowering your income taxes that you're filing yearly here.
Yes. Yes, definitely. Yep. Not talking about sales tax. Can't change anything on sales tax, unfortunately.
Yeah, anything on sales tax. And then also I wanted in your book, again, this book is so amazing. So if you don't win it from me today, I will. Somebody's already asking for the link. I will share it because you're wanting to know the specifics. How do you prep for this stuff? And one of the things you mentioned is using your home office as part of a write-off. And so you do have to prepare and plan. You can't just say after the fact. You have to say, like, I have an office in my home that this is where I do my work, and everything in this office is for work, so I can write off this entire square footage. Or you said in your book that you can use part of a room or a closet, I'm sure, but you have to have a dedicated workspace. It can't be your kitchen table that you sit down and you eat dinner at that table, plus you do your business at that table.
Yes, right.
Can you clarify that just a little bit?
Yes, and I do want to make a comment. Do not use TurboTax. Somebody said, what software did she say? Don't use TurboTax. Guys, do not. I did not say TurboTax. So we were talking about accounting softwares. Yes, as far as having business use of your home, you need a dedicated location. It doesn't have to necessarily be an entire room, but you need a portion of a room that you can clearly stake off that this is for business purposes. Now, if you have a spare bedroom and you have an office in there, you're going to need to get rid of the spare bed. Okay. So if you want to claim that room as business use of your home, if you had an area like, say, an open space for a living room that you could clearly stake off that this portion is used for business purposes, you can definitely use that. You can write off repairs and maintenance, utilities, income taxes, real estate taxes. You can write off the insurance. You can write off mortgage interest. Plus, you can depreciate the property. So all of that can be taken if you have business use of home. So your percentage, it would be, and here's one thing most people don't know. You can actually back out the hallways and the common areas to determine the square footage of the house. So you can take your total square footage and or your square footage of your office and divide that by the total square footage, backing out the common areas and hallways and closets. So that can make your percentage much greater.
Wow. What are some of the other deductions that you think people need to look at that maybe they don't usually think are a business deduction?
Just a handful of things. What I see on every tax return are the auto expenses are not being claimed properly. It's either, you can take mileage or actual expenses. Most people are taking mileage. If you use the vehicle more than 50% for business purposes, there's a huge benefit for you to claim actual expenses plus depreciating the vehicle. And we'd have to discuss that to make sure it's in the best interest. But business use of your home is almost always missing. And if you're using some sort of accounting software yourself, what it typically does is a simplified method. So it's not actually asking you for the expenses, and it's limiting you to $5 a square foot, which I typically see between $3,000 and $5,000 a year in a business use of home deduction. And so you're missing out typically on thousands of dollars there. The next thing are, just super simple, like telephone and internet. The last, not even the last, but travel is one of the things that I want you guys to understand. Like travel and meals, you can almost force to become a tax deduction if you want to, if you are truly attempting to earn income. So things like if I want to go to Florida, for instance, and I want to be able to write that off, then I would schedule an appointment in Florida before or after whatever I want to do while I'm there. And because I'm doing that, I would schedule that appointment ahead of time. Now I can write off my travel to and from, and I can write off the things that I'm doing. Entertainment is limited now. There's ways to kind of add some entertainment back through advertising. But if you understand that there are so many things like meals, you can go out to eat with you and your spouse and your children. If you take a prospect or a client, a potential client, customer it could be an opportunity meeting, or it can meet someone like your upline, your downline, or someone you're trying to train, right? So they could bring their spouse and children along, and you could write off 50% of your meal, and they could write off 50% of their meal. So there's lots of ways to get back these deductions. It's just, it's not necessarily that some of them are even written off or not written off. It's that they're not claiming enough of them. And a lot of times that's due to scarcity, or they're scared to death, their fear. But the other times it's just they haven't kept track of it. And because they haven't kept track of it, they're overpaying. And guys, listen, when you don't claim $1, it's costing you 35 to 40 cents. So you need to think about every time that you spend $1, you're saving 35 to 40 cents of every dollar. When it's a business expense, it starts becoming fun to spend money. And I'll just give you, for instance, last thing. I bought we're buying a toy hauler, and we're going to pick that up on Saturday. So we bought a $65,000 truck because we had to have a truck to pull it, right? We have a Suburban now, which was $65,000 last year. We bought a $65,000 truck. Now we're buying a $68,000 toy hauler. And guess what? It's 100% tax deductible. I didn't pay $1 down on the truck. It will be a $65,000 tax deduction for me this year, plus the interest, plus the gas, plus the interest, plus the taxes, plus the repairs and maintenance. All that is tax deductible. Then the toy hauler is also a tax deduction. So 90% of it's going to be used for me to drive around the country and spend time with my kids while I am teaching tax strategy, while I'm doing events, while I'm going to different cities. That is a $68,000 deduction, plus the interest, plus the taxes, plus all the stuff. And guess what? I didn't put a down payment on it. I'll pay maybe $3,000 on each of them, maybe $4 this year. And I have $130,000 worth of tax deductions. That saves me. 40% of that is $50,000. Do you understand how this tax game works? Like I spend that money. I didn't spend the money. I borrowed the money from somebody else. Yeah. Now,
well, you're making me feel really good. My team is commenting because we just bought a big motorhome RV last month. So, and I've already said I'm going to go around and visit my team members. So
yes,
write it off.
Correct. And I mean, that saves so much money, guys. So, I mean, instead of us paying taxes, we're trying to grow our business. I mean, how beneficial is it for me to drive across the country and do presentations and do tax strategy with teams? Like, that's what I want to do with my life. And so I will be working, but I will be working in a toy hauler, and my kids will be riding on their ATVs. And obviously they'll be there with us. And when we're at events, they'll be helping us. So all of these things, you just need to understand the tax game. When you understand it, it'll start making sense, and you'll fall in love with the fact that you are in this home-based business, whether you're making money or not today. That is irrelevant. You can save $4,000 to $7,000 a year by having a home-based business. That will equate to $9,000 to $13,000 a year as an increase in your paycheck. If you want to break it down, that's what it means, because the bring home is so much greater than you could ever imagine than you making an extra $4.50 an hour, because that's where you need to be in order to be equivalent to just starting a home-based business and attempting to earn income. And guess what? You might create a legacy. You might change the world. You might help millions of people, or you might help 10. But at the end of the day, you can't typically do that in a W-2 world. Like, you can't leave your job to someone else when something happens to you. You can leave a business to someone else. So that's my 2 cents. And if you've got anything else, I think I have a radio show that I have to get on. But let me just see. Yes, I do. Okay.
Well, we appreciate you coming on and talking to the team. And I will share your book link, because I think everybody's going to want that. I will share all her information, guys, because it is eye-opening, and it can be a total and complete game changer. I think some of you are even thinking your husbands are going to be backing your business a little bit more now that they know some of this stuff. So yes. In the comments, I would love to see later, share your biggest takeaway from today from Courtney. And Courtney, I'm really excited to talk to you tomorrow. My husband and I have a strategy session with you. And just again, I appreciate your time so much.
Thank you. Thank you so much, guys.
Wonderful. All right. Thanks.
Great. Bye.
Bye, everybody.